Hey everybody, what's going on? My name is Matt and welcome back to Crypto Kings. In today's video, I'm going to be talking to you guys exactly about what Shiba Inu looks like it's about to do. So if you guys are new, make sure to drop a like and subscribe to the channel for more daily SHIB vids. Let's get right into it, folks. So if you guys have not already seen what has been going on with SHIB here on the day, we are down a little over 6% with our market cap, of course, falling below 40, still staying above dogecoin, but regardless, falling below 40 with a massive decrease here in trading volume over the past 24 hours. And this always isn't a bad thing because volume isn't quite as cut and dry as something like market cap, because volume sometimes, when the wrong type of volume, the sell type of volume, could obviously have a very damaging effect on the price of an asset. So volume is not always quite as cut and dry as it is, but it does appear there are a lot less people who are actually trading this. So when we look at the 7-day chart, we do get a little bit of relief because it does look like it's kind of been holding far above where we were even just a few days ago. So when we look at the 7-day, man, again, these dips, which are, sort of really metastasizing here every time we see a surge like this, this dip all the way down to around 57 over here, another dip here down to around 60. These dips really are showing themselves again, and it looks as if Shiba Inu is about to retest one of those dips, and I think we'll see right after that how this sort of responds. Because what I've been talking about on this channel is that, it's probably best if you're looking to buy into SHIB to dollar cost average down as best possible, meaning you want to, as best possible, find, and of course I'm going to get an error here from TradingView, you want to, of course, as best possible, find these spots. You want to be able to find these dips. Now, how do you do that? Well, the easiest way, again, like I've been talking about on some of my live streams here on the channel, is to do a limit buy at a set price. So if you believe in the near future it is going to dip to a certain low, you can set it to auto buy at that certain low, and boom, you're good. You should make some money. And speaking of making money, if you guys want to check out Webull, guys, top of the link down below in the description. It is so easy to do, guys. You can go over there, make an account, and you guys can get 2 free stocks valued up to $2,300. And of course, you guys can trade a Shiba Inu on Webull. It is completely doable over there. You guys can do stocks, crypto. I really do think it is a great all-in-one option for someone that is looking just to learn a little bit more about investing and start their investing journey. So if you guys use my link, I get a couple free stocks as well. So if you guys like to support the channel, I always do appreciate it. Top of the link down below in the description. But when it comes down to it, guys, we're trying to find how to enter at these little bottoms here. And you guys can notice that, just about every time we have, a run like this and we exceed what the relative strength index considers to be normal, every time we have a little bit of a run like this, it typically has some pullback, which is a good time to enter. I mean, literally, this happens just about every time. You guys can see here again, we hit 88, falls back down, we reach down to 67. So this, you could say, was another instance of a dip in that case. But really, guys, what we are trying to find is how to dollar cost average in as best possible, meaning you are trying to get the most amount of SHIB for your buck. So how can you do that? Well, what we're trying to sort of look for here is to look for something that gives us any indication of how this is going to behave in the near future. And from what we can tell, this kind of looks like a symmetrical sort of wedge. And it really is, now as we look at it, seeming to materialize into that. Now, the only problem with this is that this symmetrical wedge isn't quite as clean as some other symmetrical wedges out there. Because this symmetrical wedge typically would show a breakout, meaning that the highs are getting lower, so, people aren't, buying it quite as high, but then the lows are getting higher, so people aren't selling it as low. So typically that leads to a breakout because the prices kind of squeeze in on each other. Typically that would be a great thing, but the issue here is that when you look at this graph, these don't quite have enough oomph to them. They don't quite have enough emphasis on these highs, and that's what a really great guy in my live stream yesterday was talking about. The perfect sort of way to look at this would be to see some kind of dip here, of course, high, but you really would hope that on the 28th we would have hit a little higher. We would have kind of followed more of touching the top and the bottom, touching the top and the bottom. This would be a much better sign for a breakout if it were a little bit cleaner like this. Unfortunately, most assets like this, for the most part, do not trade in such a clean, neat kind of way. They don't always follow wedges in the same way that you feel like they should, or the way that, these wedges are written out, in examples, in articles and books and stuff. They don't always follow it the same way. So again, it could be a symmetrical wedge, yes, but these highs from the 29th and 28th should have been really a little bit higher, and that is kind of the one worry that I have. But regardless, I think it's nice to set a line of support where you believe, for the foreseeable future, this will dictate how this behaves. And I think a good line of support to really, sort of look for is around 60. And I've mentioned this, and a lot of people said, oh, I don't think it'll ever hit 60 again. I hope it doesn't, but realistically, I think it will. And that's just because, with any asset, there's going to be pullback like this. I think it will hit 60 in the future. Now, again, we could have kind of a little volley like this, and it could head down and bounce back up. That is a very possible scenario. Or this could be a slightly rough but bumpy sort of area of consolidation here, where we sort of bounce between like 68 and like 75, and we could watch it kind of just bounce off the top and the bottom here. That is another scenario. So it really is tough to sort of tell, because again, this area here is not quite as clean as I would like it to be. If this were like a really good area of consolidation, you would be seeing it kind of like this, where it would just be bouncing off top, bottom. You would see something more like that. To see it kind of head down like this, unexpectedly, is a little difficult. And, that's really what sort of limits technical analysis in a sense, because they don't always behave in accordance with, pre-existing patterns and trends and things like that. Of course, when we take a look at the MACD, which you guys can see here, it is still in the red technically, so that does make things a little difficult. It very well could head into the green if all things, sort of go according to plan and behave themselves. So I'm definitely looking out for when the MACD will move into the green, and that definitely, could be possibly happening here in the near future if it is able to behave itself and not fall past key, critical lines of support. When we check our Fibonacci retracement, of course, you guys can see this is going to give us, a sort of concrete outline here on exactly, what to look for with these highs and lows. So we have the low here at 57 and the high here at 78. And essentially, these percentage points are different potential lines of resistance and support. So you guys can see that the 78.6% line here has done a great job of being a good spot to bounce off of here. So 61, is sort of the spot where it is going to bounce off of, because you guys have seen on the 28th it did that twice, so it has bounced off of that. And I imagine if it, kept hitting it, it would probably keep bouncing. So it's very possible that right now we could bounce off this line again, for the foreseeable future. That is possible. Then again, we are also watching it, hanging out above the 23.6% line for a little bit. So it appears to have maintained itself here, but then slips down even through the 38.2% line. So that does, sort of raise the question about how the 23.6% line here, this top red line, is going to sustain itself, because it definitely does make it a little bit less cut and dry. That being said, guys, thank you all so much for watching. I really do appreciate all the amazing support on the channel, guys. Check out Webull, top link down below in the description. Make sure to drop a like and a comment. Let me know where you guys think in a week from now SHIB will be. Thank you all so much for watching. I really appreciate it. My name is Matt. See you guys on the next one. Peace.